Well, let's bring in our market voice now. Shreyash Devalkar is head of equity, Axis Mutual Fund. Shreyash, good morning. Great to have you with us here. Thanks very much for joining us. Are you watching, by the way, Shreyash, what's happening with this entire AI anxiety hitting various parts of the financial services sector in the US? Or how would you read it? You think the fact that maybe, I don't know, I mean, there are various ways to think about this, right? Maybe here in India, we are not that developed, right, in terms of financial products and offerings, etc., etc. So to get disrupted won't be that easy. That's one way. That's the optimistic view. But you can make an opposite case as well. What is your sense, Shreyas?
See, AI is having impact on multiple things. Obviously, financial services is one of them. But financial services sector is regulated, and there are we have seen this even earlier also. So it's not that a new thing which is happening out in the financial services. When it comes to digital, there are multiple startups which started some time back. Today it is about AI. But broader point here being, since this sector is regulated, there are multiple aspects of risk to be taken into consideration. So one should take it with a pinch of salt on all this development. Most important, in my opinion, as far as Indian markets are concerned, and as far as the earnings are concerned, the IT sector, which has seen a lot of beating during this time. And the impact on them, in my opinion, generally is also baked in terms of when we look at the growth of all these IT services companies, which we are considering around mid-single digit or low single digit. So this actually factors in some sort of deflation in the revenue growth, actually deflation in the pricing as well, around 2 to 3%. So yes, AI is impacting multiple sectors, but a direct impact so far, in my opinion, is getting more reflected in the IT sector as such. As far as the financial services, I'm sure our Indian IT financial services industry also is evolving. Some of the companies actually highlighted that they are trying to use it to their benefit for reduction of cost. So cost to income ratio. Actually, if you see for multiple years, everyone predicted that cost to income ratio will come down, but actually it never turned out that way. Some of the NBFCs are trying to work more closely on it, and let's hope that we see the benefits somewhere in that as well.
Shreyas, hi, morning. This is Rima here. So yesterday we got the AMFI data for the month of January, and what stood out was one, equity inflows declined 14%, and two, gold ETFs soared 24,000 crore in terms of inflows. I mean, what is your opinion on that? And in the first 10 days of February, is this the trend which has continued?
Any asset class, so it's not about only gold. When it performs, obviously the flows track to them. We have seen the same earlier in mid cap and small cap as well. In 2024 and part of 25, the mid and small cap also got a lot of flows. Actually, in these recent numbers of January, actually these segments are actually getting lower flows than the peak what we have seen earlier. So this rotation are part and parcel. In that sense, gold as a dollar debasement trade is continuing. Even recent data about China, the way they are buying gold, actually, it's one data suggests that they are almost 9% of their reserves in terms of gold. So this trend of the central banks buying gold still continues. And in that sense, gold as an asset class or a dollar debasement trade and the beneficiaries of that as asset class warrants allocation in the portfolio for the investors.
Hi Shreyas, good morning. Good to see you in. I think you have been reasonably positive on the auto space. And then, last year in September when you got that GST rationalization, the stocks did very, very well. How are you all positioned right now on autos? Do you all maintain that bullish stance? And within autos, what do you like?
So in auto post GST, and especially in the recent past, it is about a commercial vehicle CV cycle as well. So there are two aspects to it. So GST definitely benefited among all the sectors where there was a GST cut at that point in time. Auto is the only sector which showed some uptick in many segments. both in two-wheeler and four-wheeler. So we continue to be positive on that segment. Actually, incrementally in the last 2-3 months, the commercial vehicle cycle has improved. Even the tractor numbers are coming out very, very well. So if you see multiple aspects of auto, they are actually doing very good in the recent past, including some of the EV names as well. So as a pack, I think that this various companies are delivering on the product launches as well as the overall on-ground demand. We are seeing in multiple aspects. Only concerns in auto segment remains around the commodity price inflation and whether the industry will be able to pass it on or not. Historically, it depends on, frankly, it depends on how good is the demand for a particular product. And one need to take that kind of view. Even if you see 2016 to 20, overall auto demand was not that high, but some of the company or one of the company, when the product life cycle was good, at that time, despite commodity pressure, they could pass it on. So one need to take such kind of views in this environment. So the only two concerns, as I said, one is the commodity, and the second one being whether these US or European cars will come and will affect the industry. As of now, the way things stand, probably not at a mass market level, but we need to evaluate going ahead. So all in all, we are positive on the sector as reflected in our last month portfolio.
Shreyash, you have multi-asset funds, right, at Axis?
Yes.
So the reason I'm asking this is because I think Rima asked that question about flows, etc. Silver has fallen from whatever 150 to 80. Gold has seen not that much. I mean, 12-13% pullback, but silver is more. So if new money which comes in, how are you allocating? I mean, what is are you in a multi-asset kind of situation?
Sure. So if you look at multi-asset allocation funds, so obviously gold, silver is sizable part of it, right? It varies from 15 to 22% based on the mandate of the fund, in which fundamentally the gold is where the world is.
No. Sorry. You're saying you are you can in a multi-asset scheme you can be very overweight on gold, silver, and underweight equities. That's the whole idea, right? And or vice versa, or. Okay. Yeah, sorry, go on.
Sure. So there are two kinds of schemes. One is the equity taxation, right? And in which you have to be 65% odd in equity. So those kind of schemes, wherein then obviously the exposure to the gold to that extent comes down. While in other schemes it can be higher. Now, in which among the gold and silver, the real trade is about gold, right? And when it comes to silver, it is about more a proxy to it. And actually that trade even percolated to copper and other metals as well. And the arguments you are aware of what the way markets are making. The point here is one need to look at what is the, in all the commodities, what is the stock to flow ratio, what they call. So in case of gold, stock to flow ratio is as high as 67. And it varies month after month or year after year based on overall demand supply, but it's over a longer period of time. The point why you track this is the higher this ratio, it's not very easy to increase or decrease supply of that commodity. So in case of crude oil, it is low. In case of silver, it is somewhere around 10. And in case of other commodities, it even somewhere around 4 or 5. So with what is the ability of the industry to increase demand and supply is very important. So broadly, all in all, that's where gold is relatively preferable. Obviously, we have seen very high volatility in silver, and one can look at it based on the relative ratios, which again people
track
on the gold to silver. But we are broadly more positive on the gold.
Got it.
Thank you, Shreyash, for joining in. Always a pleasure interacting.